In today's video, we tackle the nuanced landscape of stock investments from three critical angles. First, we look into the question, are stocks a good long-term investment? Next, we confront some of the disadvantages of committing to the long term. Finally, to wrap up, we unravel the role of technical analysis, a key tool for traders seeking to navigate around their positions. You asked, are stocks a good long-term investment? Well, there are no investments that can be bought and simply kept in your portfolio without monitoring them. Stocks are better than most investments over the long term because they protect the investor against inflation and also provide him with some growth. Having said that, it is very important to define the long term. Most value stocks can be bought for periods of up to 5 to 7 years, and most growth stocks or high quality companies can be bought for even longer. However, the rule of thumb is that they need to be monitored regularly to check that their performance is in keeping with their past record and their competitive position is the same as it was earlier. Now that we've dissected the essence of long-term investments, it's crucial to acknowledge the flip side. So keep watching as we next dissect the disadvantages of long-term investing. As a long-term investor, it is very difficult for me to be neutral when someone asks me the question, what are the disadvantages of long-term investing? However, let me give it a try. As I see it, though there are many advantages to long-term investing, there are two definite disadvantages. The first is that the asset class that you choose should not be giving subpar returns over the long term, say 10 years. Most investors would be surprised to know that even in Indian equities, there have been periods of 10 years where the returns have been zero. So that's the first problem. The second problem is that an investor misses short-term opportunities or stocks which might go up over the next few months by being a long-term investor. On the whole, I would still prefer long-term investing to trading. Having explored both the benefits as well as the potential pitfalls of long-term investments, it's time to equip ourselves with an additional layer of knowledge. To do this, we need to delve next into the realm of technical analysis, a strategic tool not just for traders but also for long-term investors. Technical analysis is the study of the price of security and maybe the volume to figure out whether the stock is going to do well in the future. Technical analysis is not the primary tool of a long-term investor who would like to understand the value of companies by studying their cash flows and their profits and estimating the true worth of these cash flows today. However, technical analysis can be used as a supporting function for even long-term investors. Technical analysis should ideally not have a role to play in the stock or security which is being selected by these investors, but it can definitely have an important role to play in helping these investors to decide when to buy these securities and when to trim or add or even completely sell out from these securities. Think about how to use technical analysis as a supporting function to your own fundamental analysis while buying stocks. As we conclude this enlightening journey, you've gained insights into the merits and drawbacks of long-term investments. We've explored the pivotal role of technical analysis not only for traders but as a supplementary tool for astute long-term investors. Now, armed with this comprehensive view, you're better positioned to navigate the complexities of the stock market. Remember, it's not just about picking stocks. It's about understanding when to hold, when to let go, and when to use the analytical tools that guide these decisions. Happy investing.